everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my podcast partner, Don Durrett, founder of goldstockdata.com, as well as the Sonoro Gold team. Ticker in the US is SMOFF, and in Canada, SGO. We've got the CEO, Ken MacLeod, on your left, and Chairman John Darch on your right. Hey, guys.
Good morning. Happy to see you guys. Wednesday is good afternoon now. Right on the.
Yeah, welcome, Ken and John.
Thank you.
Good to see you both again.
Yeah, absolutely. So would you guys be kind enough to kind of walk us through your recent news and any other updates you'd like to share?
Certainly, we're pleased to do that. September the 30th, we issued a corporate update, which is basically our plan of action as we see it for the rest of this year. In it, we stated that we were moving forward with Cerro Caliche. We have surface rights now. We're planning to go ahead with the completion of the purchase of the land rights, so we own it 100%. As we move forward with that, we also announced that we would be starting a new PEA, which will reflect current gold prices, because the previous one was $1,800 an ounce, and therefore there's a marked difference there. We also introduced the proposed spin-off of San Marcial. And the reason we did that is because we've got to the stage so far with Cerro Caliche that we know the next step really is the approval of the MIA. There'll be nothing else for us to do beyond that point once we've completed this section. And with San Marcial, we believe that there's never been given any value to it. And that's because we've not spoken about it. And we've not done that because we like to focus. But now we see that as we're moving forward with Cerro Caliche to go to production, we should look at San Marcial and give value to our shareholders. So we've initiated the proposed spin-off of San Marcial, which we'd like to have happen by the end of this year. We already have the name of a subsidiary. We would do this a reverse takeover somewhere. And that would mean that our shareholders in Sonoro, on a pro rata basis, would have shares in San Marcial, which we would hope to be a public company. And the good thing there is, as a separate company, it means as we spend money on San Marcial, there's no dilution to the shareholders of Sonoro Gold.
Right. Okay.
And one of the advantages, of course, in spinning off San Marcial is the project will end up with Sonoro shareholders still owning a percentage of the company, of the resulting company, and the Sonoro shareholders will receive a dividend proportionate to the number of shares they currently own in Sonoro. And then, of course, there'll be new financing coming in, and so there'll be a percentage going to the new financiers as well. So that's all work in progress right now. And that'll be consolidated over the next 2 to 3 months.
And what you would have seen in the news release for the financing, with the development of Sonoro Gold now, we now have the surface rights, which control not only Cerro Caliche, but when we get to September 2028, we will then have the surface rights to our neighbors, Cerro Prieto.
Okay. And I see that you guys are doing a financing, and that's been really successful here. So congratulations on that. I would assume the PEA that you're going to update next year would be funded by that, along with other initiatives, correct?
Yes, correct. And I think with the PEA right now, the timing is absolutely perfect for us, because the original PEA in August of 2023 was done on the basis of $1,800 gold as a base case. Well, yeah. I've seen recent PEAs done anything from $2,700 to as much as $3,000 gold. And so we're working on the premise right now that we'll be somewhere in that range for a brand new PEA. Now, the impact that's going to have on the project economics could be substantial, because obviously at let's call it $3,000 gold, the net result is that the cutoff grade will be commensurate with the price of gold. So as the price of gold goes up, the cutoff grade goes down. So you were able to mine more material, or you were able to take material that would otherwise go to the waste dump. Now you can put it into the crusher because it becomes economic. So I'm looking forward to receiving the results of that new report. Estimate right now would be in the order of about maybe January of next year. That
Okay.
report will be ready. In the meantime, we'll have an updated mineral resource estimate as well, and that will also be based upon a more robust gold price than $1,800. So that should come out sometime in the next 2 months.
Okay, that's great. So you've got some good news coming between now and January. And generally a slower time for some mining companies in terms of news. So that's positive.
Well, it hasn't been a
Don,
slow time. It has not been a slow time for us on the technical side. We've been working on examining where the next phase of drilling should take place, and we have multiple drill targets that we fully expect that when we have enough capital put aside for the new drilling program, should start to impact the overall size of the resource as well.
that's great. Okay. Well, yeah, that's exciting stuff with the PEA because I'm seeing that re-rating happening with a lot of stocks that choose to do that because prices have just escalated so quickly here. I mean, as we're recording this, gold is at 4,300, so it's like 3,000 or 2,700. Ken, as you're pointing out, is not an unrealistic number to be using in some of these reports, and it really does have a potential impact. Don, I'm going to turn it over to you because I know you had some questions, and we have a shorter period of time today.
Yeah, so I know your project fairly well. We've talked before, so I'm just going to give an overview of your project. You can take notes or cut me off if I say anything wrong. But currently, I have you at common shares 240 million and fully diluted 347 million. So that would be a $49 million US market cap. Your US symbol is trading at 14 cents. You have more than 50% insiders. I consider an insider anybody who's a long-term investor is not interested in, 70% premium or something like that. You have 1 million in debt. Is that correct?
No, the debt is actually higher, and it's in the order of about $3 million Canadian, of which almost exclusively the debt is to the insiders of the company.
Okay. Your resource is fairly small at 300,000 ounces M&I, 200,000 inferred, but it's all oxides, about 0.45 grams. And you guys are highly confident because you haven't drilled the property. It's a big property. I have Cerro Caliche at 12,000 acres, but you just added some more. So is it bigger than 12,000 now?
No, it's we have not added to the mineral rights at this point in time. What we've added is the surface rights. We have I'll go to hectares in that regard. The Cerro Caliche property as it stands right now is 1,400 hectares as far as the mineral rights are concerned, but the surface rights are now been extended to over 4,000 hectares. And as of September the 1st of 2028, it increases to over 5,000 hectares. And as far as the mineral rights are concerned, we're dealing with strictly one rancher at this point in time that controls the surface rights, and we're dealing with the mineral rights from 5 different concessions. So we have as much as we need to go forward and be able to sustain the next 10, 15, 20 years of production.
Okay, so on that 1,400 hectares, you're highly confident you're going to get over 1 million ounces. Is that correct?
I think we're highly confident of going beyond 1 million ounces. We've done an investigation 3 years ago into the potential. And the potential, as we understand it, based upon the price of gold at that time, at $1,800, was the potential was up to 2 million ounces. So now that the price of gold is much more robust, in fact, it's essentially doubled during that period of time, the amount of gold that's available to us to be economically viable should theoretically be substantially higher.
And that's just on the 1,400 hectares, correct?
That's strictly on the 1,400 hectares.
Right. So if I'm correct, though, if you have 5,000 hectares, if surface rights, if you can get the mineral rights, it is 12,500 acres. So my number is right once the surface rights is correct.
Yes.
So what is the chances of you getting those mineral rights, and when?
There's no desire on our part right now to expand the mineral rights, simply because we know at this point that we have the area within the Cerro Prieto ranch We have enough of a footprint there that there's not much potential for us to increase within the Cerro Prieto Ranch as a whole. However, we are looking at a more expansive area for expanding our potential resource. And over time, we will negotiate additional mineral rights and surface rights as time goes by.
So since you have the surface rights, does that kind of prevent anybody else from getting the mineral rights?
No, it does not. The surface rights give you strictly the ability to build a mine and the infrastructure required to build a mine and access the property. The mineral rights give you the right to develop a mineral resource underground on the property, either surface on the surface as an open pit mine or underground as an underground mine.
I'm a little confused here. You said somebody else could actually build a mine there, even though you have the surface rights. Did I hear you correctly?
No, we with us now with the surface rights, and nobody else can build any structure.
Okay, you kind of misspoke there. You said that somebody else could use those mineral rights, but in actuality, they can't.
No, they really can't. Yeah, they're
right. Okay. So basically, whoever owns those mineral rights, in order for them to get any money, you're really the only game in town, right? They have to, if they want money, they have to give it to you. All right, yes. That's clear. It's pretty obvious. Okay, so the PEA. So the original PEA was around 30,000, 33,000 ounces a year for 9 years, with an AISC around 1,400. So that's a very good economic project. So, I mean, how long do you think it's going to take you to expand? This is kind of out there ways, but I still want to see if you want to answer it, because for me, this is really important. How long do you think it's going to take you to drill the property out, add ounces to where you can expand production from? Because, I mean, this is the inevitable direction your company's going in. You're not just going to stop at 30,000 ounces. So as an investor, I know you're not stopping at 30,000 ounces. It makes no sense, right? So the important question for me as an investor is, okay, when do you get to 50,000 ounces? Now, I think if you get to 1 million ounces, you should get to 50. So at 50,000 ounces, your free cash flow jumps to, at current prices, about $150 million a year. And gold prices can go higher. So you currently have a market cap of 50. And at 50,000 ounces, you're doing 150. And it could go higher. So you can see the upside is tremendous if you get to 50,000 ounces. But how many years do you think it will take you to drill the property and then expand to say 50,000 ounces, like 50% increase in production?
I believe that 1 year of intense drilling with one rig and maybe even possibly 2 rigs could get us certainly beyond the 1 million ounce potential. And but keep in mind as well that when we produce the next edition of the PEA, you're going to see, based upon the higher gold price, you're going to see a much reduced cutoff grade. And that's going to increase the size of the available resource, of the economic resource as well. So, you know, that will get us much closer, much faster to the 1 million ounce mark than simply just drilling.
But also,
go ahead.
Sorry, to comment, and for Ken to comment, that with the new mine plan and the new PEA, we will be achieving 50,000 ounces and more, we'd anticipate, for the first year of operation.
Well, I would imagine so.
Okay, yeah. So for me, the key to your company as an investor, the key is the 50,000 mark. That's kind of my floor, right? I do own the stock because I do think you'll get to 50,000 ounces. Mm-hmm. But like I said, if you get to 50,000 ounces, your company's kind of off and running at that point, because your free cash flow is going to be so substantial that at that point you'll be able to drill out the whole property fairly quickly. And you'll probably expand production even higher. And so, yeah, I mean, it's exciting. The one thing is the build on this project is very short. It's less than a year. So So here's the next question. Two questions. First question is permits. I'm hearing lots of positive stuff out of companies that are mining in Mexico as far as confidence in getting their permits. So, I mean, how confident are you that you're going to get the permit and get into construction next year?
I'm very confident we will achieve it. My own goal right now is first quarter of 2026. I think that's quite reasonable to expect that. We have been working closely with Semarnat and the Mexican government as a whole to achieve this target of approval in Q1. And the reason that I'm optimistic is that they've identified now what their basis for requiring mining companies, Canadian mining companies in Mexico, what are they expecting as far as environmental, social, and operational? And I believe that we have met our meeting all the operational goals and all the environmental and social goals that the Mexican government is now illustrating. It hasn't been finalized as far as the regulations are concerned, but we have every confidence that the regulations that we will be able to meet their entire requirements.
So there's a saying, watching people do, not what they say. So as far as what you guys are doing, so have you told family and friends, hey, we got a great project here. We're going to get our permit. Go ahead and invest in our shares. Have you told any family and friends to invest in your shares? Because if you have, that means you're uber confident you're getting your permit.
I would say, Don, there's not anybody that I know who are not shareholders.
Including my family.
I think like the confidence level has to be demonstrated by the fact that you refer to the loans. Those loans, vast majority, are due to the insiders. Unsecured loans, we put them up, and even though we've been pressed by many people, convert all your loans to shares, improve your position, we've always had the same stance, and they've never changed. We're comfortable with 28, 30% ourselves. We have a strong shareholder base, particularly in Europe, accounts for another 30%. So we're way over the 60% of solid insiders. So we say we are very confident to put our own money in, to loan the company money, and no hesitation to my friends and my family a good company in which to invest.
And I think it bears mentioning as well that over 92 projects have been approved, mining projects that is, have been approved by the government since President Sheinbaum was inaugurated over a year ago. So we're on the right track now with Mexico mining. We're in the right track with the way that the environmental regulations are being formulated.
Right. Well, yeah, sorry to cut you off, but what I heard in Beaver Creek, the confidence level in permitting this year at Beaver Creek was way, way higher than last year. And it was high last year. I mean, people were confident last year, but this year, I mean, they were uber confident. And the reason why is basically what they told us is that, and you can confirm this, is that the Mexican government is kind of, under Sheinbaum, is kind of using a new methodology. And that methodology is one-on-one interaction with the companies. So they're spending lots and lots of time with the companies to get to know them better, to let them know what they expect. It's like a whole new methodology of permitting. And that's the reason why there hasn't been any permits, because they want to put this whole system in place before they announce any permits. Is that correct?
I believe that is correct. And the interaction between us and the Mexican government is really unheard of in the prior administration. And so we're very, very confident that the Mexican government is intent on ensuring that our permit will be granted and that we meet the highest levels of environmental and social regulations.
And conversations we've had with our current shareholders and new participants in the private placement have shifted from not if, but to when the payment.
Exactly.
No longer an if, it's just when. And
Yeah.
We cannot give that precise date, obviously, but there are no other new open pit operations that have been granted anything.
Yeah. That's exactly what I was hearing in Beaver Creek. It's not if, it's when. So thanks for that, John. That's great. So I only have one last question, and it's the most important question, so I saved it for last. Is development projects, the one way that development projects, not one, but the one that usually gets investors, the harshest, if you will, is that hurts our upside is share dilution. So you got to finance about $20 million to build this mine, and you have a market cap of 50. So, we don't want you to do, 50, you even, so you're in pretty good shape. I mean, if you did 10% is 5 million, 20% is 10 million. So you should only have to dilute. Well, you have $50 million market cap US. So you should only have to dilute 20%. I'm maximum. I'm hoping that's about right, and you might be able to do it for less than 20%. But okay, so I'm basically asking you your expectation on dilution. Is it going to be 10%, 20%, 30% to build to finance this $20 million?
Our discussions with potential lenders have been strictly on project debt, with the modest amount of equity required to complete that. That's negotiations, and on the equity side, it may well be in terms of gold loans. So we have the good fortune, I think, of having opportunities out there. We know that the project debt is not significant overall, and we know that a good portion of that will be by debt as opposed to just a straight equity dilution.
Well, of course, actually, yeah, $4,000 gold is a heck of a lot easier to raise the debt than it was 2 years ago.
Yeah, that's great. Plus, I mean, it's a 1-year payback. So, I mean, you shouldn't have any trouble borrowing some of that 20 million with a 1-year payback. But you mentioned a gold loan. I would actually, the problem with the gold loan is the borrower is probably going to make you pay some warrants to do it, and then they get all the upside because they're basically going to say, okay, this is how much you have to pay me back in gold, right? Usually the gold loans are like fixed. They're like, okay, you give me 1,000 ounces per quarter, let's say. And that 1,000 ounces is fixed. There's nothing you can do about it. And then they get all the upside. Shareholders don't, company doesn't. So I don't really like gold loans. If you only have to dilute 10%, I would rather have a 10% dilution than a gold loan because I want that upside. Because if you give away that 1,000 ounces, if gold goes up over the next 2 years, which I think it will, let's say gold goes from 4,000 to 5,000, that 1,000 ounces is worth 25% more money. So you see what I mean? So I would actually prefer, as a shareholder, I'd actually prefer a little bit of share dilution than a gold loan. But I want you to borrow as much as you can. I mean, if you can borrow, I'm hoping you can borrow 15 and then equity 5. I think that would be fantastic. That's my personal view.
And we would share that view with you. And what we'd say is this, for sort of full disclosure, we have a series of opportunities. And we're not just going to say, here's a piece of paper, let's sign it. We're going to go for it. Every opportunity will be and is being carefully considered. And our objective is to minimize dilution to all shareholders. So,
right. One last thing. I think my brain's short on time. One last thing. If you don't want to do the equity dilution until after you do the loan. A lot of these companies do it backwards. They do dilution and they get the loan. But once you announce the loan, if you announce the loan, say for $15 million, and then you announce, okay, we're going to do an equity financing of 10% to build the mine, your share price won't get hit at all. Because you're financing the construction, and it's actually a construction decision. So it's like, 10%, they're going to build the mine. I personally don't think the share price will even go down. Maritime is a good example. When Maritime financed their construction, their share prices went up. Do you remember that, John?
Yep.
Their share price went up when they did a financing for the construction. So it's not going to, it can happen to you as well. It's because it's like, okay, this is our final funding. Now we're going to go build a mine.
Yeah.
But I think I'm out of time, but I appreciate you guys coming on. I like this story. I mean, I think if you guys get anywhere north of 50,000 ounce production, this share price is really going to rip. So the risk reward on this company, I think, is outstanding. I do own it.
Yeah. Thank you, Don.
Thanks, Don.
Yeah.
Sure.
Well, guys, thank you for coming on. We really appreciate it. And John and Ken, if you wouldn't mind, Don and I would just like to have maybe 2 minutes to summarize for investors.
Certainly.
Very well. I appreciate you taking the time.
Yeah, we really value your time. Thank you so much.
Good luck with your project.
Thank you. But we do agree with you, Don, and this is how we're working it. Project debt first, not equity first. Project debt first.
Excellent. Absolutely. Thank you.
We love to hear that.
Good. Thank you.
You know, I don't really see any red flags here. I mean, they've done a really good job of not, of being patient and waiting. I mean, basically seeing that they have a mine to build. And once they saw they had a mine to build, they basically shut down the drilling and basically did the PEA and started working towards permitting. I mean, I thought that was brilliant. I mean, most of these companies, I've seen very few companies get 300,000 ounces of M&I when they had 1 million out there to get and just stop and say, okay, we're going to build this mine. I love that. It's brilliant. It's a brilliant approach because once they get into production, they can drill out that property really quickly, all organically with no dilution. So it's a brilliant strategy. They have huge insiders. It's over 50%. So no one's stealing this company. The only thing I would like to see those surface rights converted into mineral rights. I think you go from 1,400 hectares to 5,000. I think that's a big, big deal. And I think it will happen. I love the build time on this project. So once they get that permit, they'll be in construction in less than a year. And so the stock's going to double, triple. It'll double, triple once they get that permit and once they do the financing. You're going double, triple, boom, boom. So it's the only thing I don't like small gold producers, but this one has the potential. I think you'd agree with me to be 75, 80,000 a year. So that's not a small company. That's $1 billion company.
Yeah, well, I mean, the CapEx on a lot of these companies that are small potential gold producers, it's a lot of times, as you know, over 100. It's not 20 or 30 like we're talking about with Sonoro. So, like, it's achievable here. You can see in a 4,000 plus gold environment that it's achievable. Whereas you're looking at some other good projects with maybe more ounces. However, 5, 6, 7x the capex, and you're like, how is this little company going to raise this, right? And also, management does matter. These guys are tenured; they've been doing it both over 35 years. This is not their first mining rodeo, so that's probably contributing to what you just said, where they took the foot off the gas and did things methodically, like business people, as opposed to just going, to drill. So.
I think the only reason why it's at 50 million is people are still nervous about Mexico. They're worried about permit. I think that's the only reason.
And that's valid. It's valid because, Ken had pointed out 90 plus permits under Scheinbaum in 13 months, right? But, little guys, as you know, still some of these guys haven't gotten their permits yet.
Not a single open pit greenfield project's been permitted.
Right.
Yeah. So that's the worry. But I'm not. I'm confident. I'm with John. It's not if, it's when.
Right. Yeah. So from a technical perspective, for our viewers, this is trading just under 14 cents as we record this USD on SMOFF. The stock, as I remember, it hit 17 US plus on some pretty good volume recently, pre-financing. So I think once they get through this financing done, you're going to see a revisit right back to that 16 to 17 level. Looking at the chart,
I think it goes to 30 cents once they get their permit.
30 US.
Yeah, 30 US once that permit's announced. I think this thing doubles, and then once they finance it, I think it doubles again. So it goes to 100, and then it goes to 200. That's my expectation. And they get into production, it doubles again to 400. Wow. Double, it basically doubles 3 times is my expectation on this.
There's a lot of great risk reward stories like this out there right now, aren't there? It's just unbelievable. Like when you're close to production, you saw that value unlocked in 1911 gold when you and I interviewed Sean, I think around 11, 12 cents. And then you interviewed him by yourself September 23rd, just a month ago, and the stock exploded after that interview, and it hasn't even looked back. It gave a little back last week because that's normal.
When they bring out their PEA in Q1 of next year, and people realize exactly, what they're doing and what they're going to do, that stock's going to rip above $1 US.
Don't you think that a lot of the with regards to a PEA or a PFS, it's just a lack of knowledge on investors' part. It's not that they're not good investors; it's that they don't understand that when this was, for Sonoro's sake, 1,800 gold is the last time you did it, and now you're going to be able to do it maybe at 3,000. Like such a meaningful difference to the overall economics.
There was a company did a PEA at $3,800 gold. 3,800. Now,
how did they get that through?
Exactly. They did two scenarios. They did one at like 2,800, and then they did another one at spot. So they called it spot. So here's the PEA at spot, and and the NPV was like $2 billion at spot, and it was at 1 billion at 28. Yeah, it was like, but yeah. So some companies are actually saying this. We believe in this gold price. I mean,
right.
When these projects are actually built, it will be, I think, above 3,800. But they did it at 3,800. But now gold, when they did the PEA, now we're at 4,200. So it actually, gold jumped from when they actually did the it jumped that quickly. Gold it's been a rocket ship lately. I mean, when they said they were going to use $2,800 gold for their PEA, I'm like, we're not going to $2,800 gold. You got to move those numbers up, right? You got to pump those numbers up a little bit.
Yeah, it depends on the firm you're using for the PEA. A lot of these guys are very conservative. Lawyers get involved.
Yeah, I mean, come on. Do you really think we're going back to 2,800? These mining companies are just being way too conservative.
So that's the upside for our listeners, right? Is that like you and I both know that we're in a 3,000 or 4,000 plus environment now going forward for the next 12 to 14 months. So if you really truly believe that, and don't take our word for it, look at what the big banks have just said in the last 10 calendar days. JP Morgan to 4,900, Goldman Sachs to 4,900, B of A to 5,000, HSBC to 5,000. This all just happened. I mean, there's more and more people tripping over themselves to raise prices here. And you can see it reflected in the gold action today. Like this is fresh buying. I don't think it's,
There was a pivot change in August, and when silver joined the party, gold just kept going higher too. They're both going absolutely bonkers. But the bottom line is that this isn't one of those kind of up moves, down moves, up move, down moves, or up moves sideways. This is up, up, up and away move. I think the corrections for the next 12 months in gold and silver both are going to be very short. It's just very, very shallow corrections and then higher highs.
Look at what just happened. We're recording this October 20th. Okay. On October 17th, tough day for our sector, tough day for metals and miners. I have a lot of people I saw, some intelligent people over the weekend saying this is going to continue. Even on Kitco, Jim Wyckoff, who's been doing it 25 years, has been saying, this is a really bad sign. And it's like, come on, man. Like, I mean, what's the bad sign here? One bad day, one bad week or whatever. It's like,
we didn't even have a correction last week, John. We didn't look at the AQI.
But on a net basis, we actually
it doesn't matter.
Had a very constructive week.
We've been doing this for a long time. It doesn't matter what gold trades at on Monday and Tuesday. It matters what gold trades at on Friday. The only thing that matters is Friday. At Friday is when you tally everything up and see where you're at. Well, guess what? When we got to Friday, we had a green candle. The HUI was up for the week. It was a green candle. We did not have a correction last week. The only people who had a correction are people that bought last week. I mean, if you bought Monday, those are the only people, which is a tiny, tiny percentage, right? It's like less than 1%. 99% of us, we had a green candle. Just because you were up on Monday, Tuesday, Wednesday doesn't mean you had a correction. We didn't have one. When you look at a chart, a correction's when the chart goes down. The HUI did not go down; it went up. It's
Mhm.
like if you look, all we've had is green candles for the last, I think 9 weeks on the HUI. So we haven't had until you have a weekly correction. You got to have a weekly and a monthly, right? But the dailies kind of isn't really
The
relevant.
daily is getting really, too myopic, and a lot of investors get caught
Yeah.
up in
Oh,
the
I know everybody had a heart attack because the stock market went down on Friday, or the miners went down on Friday. You don't think in terms of day to day. It's like
right.
it's week to week, month to month, year to year, and so on a
Yeah, and
weekly
quarterly
basis,
too. I would argue like the
quarterly.
September
Yeah,
September
quarterly,
30
absolutely.
quarterly was very, very bullish,
But
because that woke up a new, group of buyers in October, I think.
right. Yeah, exactly. The quarterly candle's green. The monthly candle's green. The weekly candle's green. We don't
Yeah.
have a correction. We don't have a correction yet. Let's have all three of those go red, and then we'll talk correction, right? And I don't think you're going to get a quarterly red candle for a long time, right?
No,
It'll
no.
be hard. I think we might get a monthly red candle. We might. But first, we got to get a red. We got to get a red weekly candle before we get a monthly. But when the S&P 500 does crash, and I think it will, at that point, we're going to get a couple red weekly candles, I
Mhm.
believe, and we might get
Mhm.
a monthly red candle. That's a correction. You got to get some weekly red candles and monthly red candles before you even talk correction.
But I think I agree with you. I think we should also point out that historically you've had major corrections in this sector for months and months, sometimes years. That's not the environment we're in. Things are bouncing back extremely quickly, and if you're a swing trader, then good luck, because it's fast. The velocity is here. But if
Yeah.
you're short, like I hear some of these guys that are supposedly like proponents of the industry, like you and I, are like short for, no, let me hedge and do a 10 or 15%
They're,
short. It's like, are you kidding me?
they're right.
Why would you short here? Like it's like, it's just amazing to me.
You don't really want to trade a bull market. It's difficult to trade a bull market because when you're trading, you're basically getting off the train. You're basically you make profits, you get off the train, and you wait for a correction to get back in, and that's dangerous to do in a bull market, especially in gold and silver, which can be really really volatile. I mean, we saw gold last week. There was a lot of people that got off the train, and then gold went up $300 last week, and then it corrected. I think it was up like 350 at one time in 1 week. And there were people who were
Yeah.
off the train. They're off the train waiting for a correction. They're sitting there watching gold go up $300, and then they were celebrating on Friday, and they're like, "Oh, I've been waiting for a correction, right?" And then they're still off the train right now, right? Because they're thinking it's
Right.
going lower, and now it's correcting high, and now it goes higher. So it's really dangerous to try to trade a bull market, especially a volatile bull market. Very
Not only a
difficult.
bull market, but for gold and silver, market that are seeing fresh highs of all time. Like this isn't just a bull. This is like, I
Yeah.
don't even know where the price is going market, right? So you
Yeah.
have to be
Yeah.
really
Yeah.
careful with
Higher.
yourselves.
Higher, John. Higher.
There you go. Well, Don, as always, thank you so much. We appreciate it. And we appreciate all our listeners out there. Please check out our websites, FeneckConsulting.com and GoldStockData.com. This has been John Feneck and Don Durrett for Investor TV. Thank you, everyone.
Thanks, John.